Hey guys, hope you are all having a great day. Today we heard back from the Fed, and the job report was incredibly bullish. Finally something positive in an otherwise doom month full of negative news. There was actually quite a bit of information that came out today about the Fed which is very important for all of us to know, so I will be focusing on that for the most part in today's video. The good thing is that stocks were positive for the most part, as the market started rallying and recovering from that massive drop that was brought about by Facebook earlier this week. Not many other channels will say it, but Amazon quite literally saved the entire stock market from breaking more support and really nosedive. I know this is a GME and AMC centered channel, but I have to give a huge shout out to Snack Daddy Jeff Bezos's company because had that report been bad, we would be hurting really ugly today. Regardless, there are a lot of really positive things we need to discuss today, and some of them are related to the topics we covered in this morning's video, so please make sure to watch it. I will be leaving links in the video description and a pinned comment below. Let's Tokyo drift through all this stuff so that we can go into the weekend once and for all and forget about stocks and charts for a couple days, and do come check out my Discord. I added a whole bunch of new stuff in it, and this weekend I am releasing something pretty cool. The invitation link will be in the pinned comment and video description. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. The Labor Department's monthly job report came back greener than Shrek, bringing much relief to analysts and investors around the country and for that matter, the rest of the world as well. 467,000 jobs were added last month, which is a figure that is higher than the expected number set by economists. Despite some of the disruptions to businesses from the surging cases of infected individuals, these points show that the economy is finally regaining some strength. Wage gains also increased last month, and the labor pool also expanded. This report will help soften and slow down the anxiety brewing in Washington as well as Wall Street, who are frantically preparing for disappointing numbers. Employment currently sits at 2.9 million jobs below its pre-pandemic peak. The government also reported 374,000 more jobs were created in the 12 months through March of 2021 than previously reported. The economy grew at 6.9% annualized rate in the fourth quarter, and growth estimates for the first quarter are only below a 2% pace. All in all, there is strong footing in the economy, and it seems now more than ever that we can finally start catching our breaths. The question that you should be asking yourselves is, what does this mean for us now? Well, in order to determine what this means for us, we need to look no further than the Fed, because this strong job report is going to influence how the Fed increases the rates in March. The reality is that, even though the job report was incredibly bullish, and the sentiment of happiness definitely influenced investor psychology leading to the little rally we had today, it will have little to no effect on the Fed's intention to lift interest rates from near zero. In fact, it could help keep it on track to raise them again on the meeting they will have on May. Officials at the Fed already showed that they had intentions to ignore this bullish report amid the fears of a hiring slowdown. One of the main takeaways from this report is how difficult it is to predict near-term changes in the economy right now. Jerome Powell said he was prepared to continue raising rates after March and that they could do so at a faster pace than the central bank did during the past decade. This is one of the important things we talked about in this morning video, so be sure to check that one out. The inflation-adjusted yield on Treasuries maturing in 3 decades finally reached higher than zero for the first time since June. The 30-year real yield jumped 7 basis points, which hasn't been seen since May. The sell-off in Treasuries pushed rates on 2- and 5-year notes to the highest level they have been in over 2 years, helping flatten the yield curve. Central banks are doing what they can to normalize pandemic policies, but the world's collective pool of negative yield debt is dwindling at record pace, and it's leading analysts to become even more weary of the Fed than previously anticipated. If you have been following this channel, you know that I have called out the Fed many times for their brazen lies and consistent disregard for addressing real concerns. In the last meeting, I even talked about how Jerome Powell wasn't not really giving any answers to the questions he had to answer, instead being very cryptic and giving the bare minimum. I think this might be part of their new strategy, which will be them making tough talk to appease concern but then not deliver on any of their promises when the time comes. They are buying time at the expense of credibility later down the road, but what is credibility to them when it's already at zero? If nobody trusts you, what can you lose by lying a little more? Well, you could actually begin to see markets reacting opposite of what they typically do on a given set of announcements. I really hope Jerome Powell and the rest of the financial terrorists at the Fed aren't really planning on doing this, because it will be unprecedented and will quite literally blow a gap between markets and the important institutions that need to work together to produce a well-balanced economy. The fact that Jerome somehow is going to retain position as chair is beyond comprehension to me, which is more of a testament to bad things have gotten, but I digress. Give this new theory of mine. Here are 4 main things I want to warn you about in regards to what to expect. Market turmoil will have the Feds raise rates more aggressively, which means companies will have a harder time borrowing money, which will undercut profits. Because wealthier people have more exposure to the stock market in general, since it's where they park their money, they will be more affected, but that doesn't mean you won't get slapped by all that is happening. In fact, there is a good chance that 401 kilosecond may take a hit. The bottom 50% of households have $260 million in stocks and mutual funds. You can bet it's going to hurt you all in the long run as well. Prices could stop surging as much. Inflation rose 7% in 1 year, a nearly 4-decade high. Raising rates will stop this, though not immediately, since the Fed teased they will raise interest rates in small increments. Regardless, soaring prices and shortages might begin to experience less volatility. The third thing is that loans will be harder to pay off, because the Fed signaled that it's more confident in the ability for the economy overall to tolerate higher prices. Given the glorious job report we saw today, which points to an improving economy, you bet that loans are going to creep up as well. The fourth and most important thing you need to know is in regards to your wages. The economy is adding more jobs, but a large number of people are quitting because employers are not meeting new demands like better treatment, better wages and benefits, and perhaps upward mobility. This makes this part of the economy more competitive, which will grant you the ability to start asking for better raises or looking for a job that pays much better. Let's now talk about today. The Fed submitted over $1.640 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 58% of the total volume today, while dark pool trades for GameStop accounted for 54% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bullishly today, gaining over 3%. It began trading bearishly during the pre-market, staying underneath the VWAP for the majority of the time and barely even breaking above it. Upon market opening, AMC had some volatility, but it ended up breaking resistance and moving from 14.80 to 15.40. After that little run, AMC fell back down to 14.80, where it began bouncing up, this time slower with longer periods of much-needed consolidation. AMC managed to break above the VWAP, past 15.40 and then run to 15.70. Shorters took it down to a closing price of 15.35, above the VWAP. We managed to finish the week above 15, which was great in my opinion. As for what to expect for next week, as usual, I will make a video talking about it on Sunday. GameStop traded bullishly, gaining over 3% for the day. It opened to a lot of volatility that took it from 101 down to 98.08. After reaching this low, GameStop began bouncing up, reaching 101 again. It retraced below the VWAP, where it progressively moved up, eventually breaking out and running all the way to 104. Shorters took it down to a closing price of 102.34, above the VWAP. Again, I love that we ended the week above $100, a little victory for us investors. As for what to expect next week, like I said, I will make a video talking about it on Sunday. Thank you all so much for watching my videos and for joining my Discord. It means so much to me to have such a loyal and cool audience. I truly feel blessed with having the best folk in all of this movement. If you haven't yet, join my Discord. We are 3,100 members strong and I want to reach 10,000 by summer. I am bringing in a whole bunch of new content for it this weekend, and there are little groups there for all types of traders, day traders and swing traders, as well as crypto enthusiasts and of course, meme stock related groups. Come join us if you can. I will leave links in the video description and in a pinned comment. Hope you guys have a glorious weekend. Please step away from the computer and live a little. This week has been very taxing for all of us, so be sure to spend quality time somewhere else. Remember to check out this morning's video as well if you missed it, it's very important. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.